Good morning, and thank you for joining Camco Invest's online investor meeting today, where we will be discussing the company's performance as of June 30th, 2025 for the 6 months period. My name is Mohammed Akbar, and I am a member of the marketing and investor relations team at Camco Invest. Joining me are our CEO, Mr. Faisal Sokko, and our CFO, Ms. Hana Taha. Our agenda for today will cover a brief introduction on the company, an overview of the events that took place during the period, highlights on the company's business and financial performance, and finally, we'll close by answering any raised questions. If you would like to ask any questions during the presentation, please feel free to use the Q&A option, and we'll be more than happy to answer them at the end. We'll now begin with the company's overview. Camco Invest is an independently managed subsidiary of Bulgan Bank, a member of Kipco Group. We adopt the highest standards of corporate governance while providing a comprehensive range of investment solutions. Our headquarters lies in Kuwait, and we are licensed by the Capital Markets Authority and Central Bank of Kuwait. Camco Invest is listed on Borsa Kuwait and trades under the ticker Camco. Our primary business offerings include asset management, investment banking, and brokerage services. As for our regional presence, we have licensed offices in the UAE and Saudi Arabia, in addition to a rep office in the United Kingdom. As of June 30th, 2025, our assets under management grew to $17.1 billion, whereas our investment banking mandates since inception reached $43.7 billion. Our strategic approach at Camco Invest has well positioned us to better serve our clients. This approach is comprised of our effective placement power, broadening regional footprints, diversified comprehensive offerings, in-depth market insights, strong track record, multi-industry experienced professionals, and adoption of a customized client-driven approach. We will now move on to the market overview. Global real GDP growth for 2025 is now expected to reach 3% and increase to 3.1% in 2026. These are upward revisions compared to earlier forecasts, driven by stronger trade flows ahead of tariffs, supportive fiscal policies, and a weaker US dollar that is generally viewed as positive for emerging markets. The MENA region also saw upward revisions, mainly for GCC oil exporters, following OPEC Plus's accelerated output hikes. However, the recently released numbers on US inflation and the weakening consumer sentiment highlight the drag that higher tariffs could have on growth going forward. Crude oil prices, on the other hand, fell to their lowest levels in more than 4 years during Q2 2025, with Brent trading near $60 per barrel after OPEC Plus began unwinding production cuts. Average Brent crude oil for the first half of the year stood at $68.1 per barrel, down 14% year on year. Average crude oil prices fell more than 10% quarter on quarter. Price weaknesses also reflected US-Iran negotiations, softer Chinese demand, and tariff-related uncertainty. In terms of quarterly financial market performance, we saw global markets rebounded after the tariff-driven sell-off in April. The MSCI World Index posted its strongest quarterly gain in more than 4 years, fueled by renewed investor confidence, robust earnings, and strong performance in mega tech stocks. Despite persistent volatility from trade tariff uncertainty and geopolitical risks, including conflicts in the Middle East and renewed Russia-Ukraine tensions, Most asset classes recorded positive returns. Growth stocks outperformed value stocks, reversing the Q1 trend, while non-US markets generally led the way, although Chinese equities lagged. Regionally, GCC equity markets were mixed. The main drag came from Saudi Arabia, with the TSAI down 7.2% in Q2, while Bahrain saw only a marginal decline. I will now hand it over to our CEO, Faisal Salko, who will provide key insights on various aspects of the business during the 6 months period. Mubadal, the floor is yours.
Thank you, Mohammed. Quick look at performance at a glance. Profits in 6 months period ended at 7.1 versus 5.9 in the same period last year. Now, if we look, we see a drop in the fee income, but significant growth in the total income. And given the nature of the business and different elements in it, we can see that the fee income has been solid, remaining the highest in the country for our peer group. And the drop is a reflection of some transactions that got delayed from the first half to later periods. However, we're pretty comfortable with the profitability level. If you look, also there has been a growth in the G&A, reflective of our ambitions and our growth expenses that are associated with it. But ending the 6 months with EPS of 20.72, significant growth to the 6 months of last year. From a balance sheet perspective, the cash position has remained similar from December until June, and the total assets have grown a little bit, so have liabilities and shareholders' equity, reflecting the growth and the profitability in the organization. Owner's equity grew by 8.7%. If you can turn. Now, key accomplishments in the first half. Significant issue is to talk about the shareholder structure. So as of the first half, Burgan Bank has acquired United Gulf Bank, which is a majority shareholder of Camco Invest. This was completed in Q1. From before then and since then as well, more and more initiatives have been launched jointly between Camco Invest and Burgan Bank. A lot of activity that is going on different fronts, on the front office, on other areas as well. But this has been a major change in the period, and it is an accomplishment. It will strengthen Camco moving forward. Looking at, in this slide, at two elements, the asset management and investment banking. Of course, from the asset management side, our total AUM grew by 7.5% to reach over $17 billion. So this is client assets under our management, strong growth in the period. The equities and fixed income side, which is the strongest in our portfolio. Of course, our equity funds continue to outperform respective benchmarks. They are amongst the best performing in Kuwait and in Saudi Arabia as well. But here in Kuwait, if we talk about the 6 months, the three key funds, you can see the numbers there. The Premier Market Fund at 19.75, then the KIF or Camco Investment Fund at 17.23, and Camco Islamic Fund in excess of 20 at 20.19. In addition to that, of course, we manage high-performing fixed income portfolios and funds, which offer clients access to a broad range of these products across primary and secondary markets. In the asset management space, or the more illiquid side, the alternative investments, of course, in addition to our real estate and private equity, we have expanded into the private credit market, where we forged partnerships with prominent international players and are launching products in this period. Continuously evaluating, of course, opportunities in real estate and private equity. During this period, critical to mention that acquisition was finalized of a 60% stake in European Green Logistics space, which is EGLS, abbreviated EGLS. This is, of course, there's a lot of expenses in the early stage, but this is a new entity that will provide steady income for the Camco Group in the future. During this period as well, one of our funds exited on the PE side. A portfolio company called Yargici was sold to Tim's Group, which is a diversified Turkish business group operating in different sectors, and it's part of our planned exits. During the period as well, our team was awarded Best Alternative Investments in the Euromoney Private Banking Awards 2020. Investment banking, very active period. We've completed advising OSN Group on the sale of 30% stake of its subsidiary, the Streaming Limited. This was done to Warner Brothers Discovery. This was for $57 million. On the debt capital market side, Camco acted as a joint lead manager on 5 bonds and sukuk issuances, totaling $2.3 billion. These were in Kuwait, Saudi Arabia, UAE, and Qatar. The team continues to advise clients on multiple transactions, and we have a healthy pipeline of expected transactions that are closing this year and across the year in the 3 areas: the equity capital markets, debt capital markets, and the mergers acquisitions advisory side. The team also, in the Euromoney Awards for Excellence in 2025, got awarded Kuwait's Best Investment Bank for Debt Capital Markets, DCM. Other accomplishments, of course, mentioned that we are continuously strengthening our presence regionally. We have, of course, our core markets in Saudi Arabia and UAE. Those are contributing more and more to our business, especially on the asset management side. On Camco Saudi, 2 Sharia-compliant funds were launched: Camco Freestyle Saudi Equity Fund and Camco's Saudi Riyal Murabaha Fund. Those 2 funds are part and parcel of the organization there. Of course, the equity performance may be mentioned about Kuwait, but also in Saudi, in its class, it is the top performing fund for the 6-month period. The team, the company has completed its fit out and new premises and moved there in July 2025. So we announced that recently, but in June, it was a period of completion and preparation to make that move into KAFT, which is intended to be one of the most important global financial hubs, not just regional hubs. The team continues to expand with new hires and as it fulfills its business plan. On the digitization front, we continue to enhance our app and web client portal. More features are added, more performance upgrades, enhanced user interface, launching, for example, the Auto Invest feature, which enables our clients to automate their subscriptions based on their preferences, frequency, and making the process more seamless and consistent. The apps offer more integrated, seamless journey for clients in a digital sense, from the moment you open your account to funding and investing through your account. Integrating AI solutions into the app and digital platforms to enhance user experience. Summarizing market notifications through AI, highlighting significant insights onto the Borsa exchange. Brokerage, of course, the service is provided through Ula Wasata, which is the brokerage arm of Camco. Continues to build its competitive position and attract more clients, in addition to adjusting to the market changes. So the qualified broker issue that is coming now, and all the brokerage companies are preparing for it, and Ula is leading the way in benefiting from that revised and adjusted platform. Final look, continues growth. Very proud to say that for the first time in the history of the organization, we've exceeded the 5 billion KD client assets under management mark. This reflects from inception a 12.4% compounded annual growth rate. So on an annual basis, we have been growing in double digits in the assets under management that we have. It's been a journey. Many events that have happened through this period. Three items are highlighted there. The crisis of 2008, where you see the drop happening. You see also the acquisition of a majority stake in Global Investment House, which was then later merged. We see the COVID period drop, but in essence, the organization is growing from strength to strength, and this is reflected in the trust of clients putting assets under our management, which have exceeded this 5 billion KD mark, over $17.1 billion as of June 2025. Proud to be a part of that. With that, I think I'm gonna give the space to my colleague Hana, our CFO, to go through the financial performance of the income statement and the balance sheet.
Thank you, Abu Badr. Next slide, please. Good morning, everyone. We will start today with the financial performance and the income statement. We'll start with the income part. If we look at the total income, it is increased by 48% from 12.9 million to 19 million. Total income was impacted by increase in investment gain and also one-off proceeds from legal case ruled in Camco's favor. If we look in the details of net gain on financial assets at fair value through profit loss, it's increased by 71% from 1.6 million as of June 2024 to 2.7 million as of June 2025. Also, share of results of associate increased by 206% from 771,000 KD to 2.4 million KD. Other income increased from 500,000 to 5 million KD, while fee income decreased by 7.5% from 8.1 million to 7.5 million KD. Next slide. Deep analysis in expenses and net profit. General and administrative expenses increased by 36% due to business expansion from 8 million to 11 million KD as of June 2025, while finance cost decreased by 26% from 1.7 million to 1.3 million KD. Total expenses increased by 20% from 10 million to 12.3 million. Net gain to parent company increased from 2.5 million as of June 2024 to 7.1 million as of June 2025, increase of 186% on the net profit to parent company. EPS increased from 7 fils to 20.7 fils per share as of June 2025. For the financial position in asset sides, total assets increased by 4.4% from 129.8 million as of December 2024 to 135.5 million as of June 2025. Cash and the cash equivalent represented 23% of the total assets, remain at the same level of 31.4 million KD. Investment to total asset represents 62%. If you look at the financial assets at the fair value through other comprehensive income, it's increased by 14% from 10.7 million to 12.2 million KD, and investment in associate also increased by 19% from 12.8 million to 26 million KD. Next slide. Total liabilities increased by 0.8% from 64.5 million to 65 million, while loan increased slightly increased from 46 million to 48 million KD. Owner's equity stands at 67.7 million, increase of 8.7% from 62 million KD as of December 2024 to 67.7 million. If we look at the return earning, it is increased by 43% from 12.6 million to 18 million. And net debt to equity 0.24 times, and credit rating by Capital Intelligence as of May 2025, BBB long-term, A3 short-term, and stable outlook. Thank you.
Thank you, Hannah. We'll now be taking questions. We see that there are several questions that were asked during the presentation. We'll start with the first one. How has the legal case affected the composition of your income mix in the first half of 2025? And what were the main underlying contributors? Boubadir, if you'd like to take this one.
Yes, of course, the legal case did have an impact to our income mix. However, more than 2/3 of our income is generated from our core business, despite that significant amount. Now, the fees remained the largest contributor, which accounts for more than 40%, in addition to investment income at 31%. This is part of our business investment income as well. The markets, the Kuwaiti market, keep in mind, has done phenomenally well in the first half, one of the best performing markets in the world.
Thank you, Boubadir. We have another question. Why is there a significant increase in the general and administrative expenses? Hannah, I believe if you'd like to take this one.
General and administrative expenses increased by 36.5% due to business expansion, mainly in Saudi and Europe, in addition to some costs related to that legal case fees. We expect to benefit from these expenses maybe from Q1 2026 onwards.
Thank you, Hannah.
Thank you.
We have one more question. With the move into new offices in Saudi, what is the future growth plan? Boubadir, if you'd like to take this one as well.
I mentioned earlier that Saudi Arabia is a core market for Kamco Invest, and our presence in the kingdom's premier financial hub underscores our commitment to Saudi Arabia and to growth in Saudi Arabia. As we speak today, nearly 10% of our AUM is in Saudi Arabia, where we manage the largest conventional equity fund with over 1.1 billion in assets, and the performance has been good in the period. We're in the top side. As I mentioned earlier, this year we launched 2 new funds. In addition, we also invested into Foodix, which is a leading SaaS company in the region. This was through our pre-IPO fund, which focuses on Saudi primarily. If we look ahead, we aim to expand. We are expanding and aim to continue expanding our team, to broaden our offerings in Saudi Arabia, to grow our client base in Saudi Arabia, and continuing to attract regional investors that seek exposure in the Saudi market. Saudi is a core market, part of our core markets approach, which is Kuwait, Saudi Arabia, and UAE. I think that's it.
Thank you, Boubadir. There are no more questions at this time. And with that, we come to the end of our investors meeting for the 6 months period ended June 30th, 2025. Thank you all for joining today. If you have any additional queries, please visit the investor relations section on www.kamcoinvest.com or send an email to investors@kamcoinvest.com. A copy of the investors presentation will be available under the IR section of our website. Thank you once again, and I hope you enjoy the rest of your day.
Thank you.
Thank you.